What's going on, guys? I'm coming at you with a very important video on how to turn your portfolio from $0 into this right here. This is my Schwab account. I have a couple of accounts, but this is my main one. I have $673,000, up $6,000 today, up over $270,000 in 1 year. I'm just a regular guy. I don't have millions of dollars that I make every year. I read, I invest, and I have a lot of tips that I learned along the way. And all these books that you see sitting behind me right over here, I read all of those. So all these books that I read are all in my head, and it helps you make a better financial decision on how to convert a portfolio from $0 to over $600,000, and I did this in 4 years. So here's a couple things that I check out. So I have a lot of money in Triple Q. This is the Invesco QQQ. This is a NASDAQ 100 index. It's very tech heavy. I feel like tech is the future, and if you feel like tech is the future, you should probably put some money into this. If we go over to QQQ Holdings, you could go straight off of Invesco's website. You scroll down and you go to Holdings. I'm gonna do this with you guys to show you how to do it. So when you buy into an ETF, an index fund, whatever you wanna call it, it's always important to understand what you're actually buying. So whenever you wanna buy something, type in QQQ, which is the ticker, type in Holdings after it, and here we go. So for example, if you put $100 into Triple Q, you would have $8 in Apple, $8 in Microsoft, $7 in Nvidia, 5% in Broadcom, and it goes down the list. So do you believe that these companies have a moat? Are they gonna be more profitable in the future? Do you think they're gonna be more dominant? Do you think they're gonna be more innovative? If you believe in the companies on this list, and you believe that they're not selling for an astronomical valuation, then maybe you should buy into the ETF and you hold it for the long haul. Another important thing to look at is the expense ratio. 0.2 is not bad. Anything above 0.2, start being wary because fees do add up. I'm not gonna really talk about it in this video, but I'm gonna go into it in another video. So now that we know what we're gonna do, we're gonna buy into an ETF such as Triple Q and we're gonna hold it for the long haul. Now the most important part that comes into play is the mindset. So here's what we need to look at right here. This right here is a chart, history of bull and bear markets in the United States. So this goes all the way back to 1926. So you're gonna notice a trend. So for example, let's look at this one right here. This was a 14-year bull market. The stock market went up 908%, which is about 17% every year. That was followed by a 4-month correction where it went down 21%. So through this whole pump right here, this whole bull market, I bet you every single day, especially right here where there's this little dip, all the news articles come out negative. The stock market's gonna crash. Brace for impact. Put all your money in cash. Go buy CDs, go buy bonds, whatever it was. And all those people that believed it, they sold right here. And then bang, it rides up even more. They get a little 21% dip. Guess what? A broken clock is right twice a day. You can predict all day long that there's going to be a stock market crash because there eventually will be. But the problem with being negative like that 24/7 is that you're going to miss out on the growth of America. So check out this chart right here. This is a chart of the S&P 500 since 1970. Okay, 1970. What does this look like here? About $70 a share. Right now it's almost 6,000, okay? Everything in gray right here, these dark grays, these are all recessions, pullbacks, times of economic contraction. That means that for 2 quarters in a row, the GDP, gross domestic product of America, was negative. So that denotes a recession. So this is a big one in 08. This is the one that happened in the 80s. So every time, if you would have just sold on a bottom, you missed this massive run. This was a housing market crash. You sold on a bottom. Look at this massive run that you missed. Look at COVID. This right here was a pandemic that shut down all of America. What does this even matter on the chart when you zoom out? It means nothing. It's a little blip. And look at where we're at now. So all the people that panicked, they're now wondering, what do I do? And they're probably all gonna FOMO into the stock market when it's at all-time highs. It's going to push it even higher, and then it's just going to crash because, as Warren Buffett says, when people are greedy, you should be fearful. People are greedy right now, so you should kind of be on your tiptoes wondering, things are a little bit expensive right now, so don't YOLO into the stock market and do a bunch of call options. Maybe be careful dollar cost average in over the course of months, because if the stocks go up a little bit and then they go down a little bit and go up and down, you buy at the average price. You don't put it all on the top and then it tanks. So if it does happen to fall a little bit, you buy all the way down and you buy all the way up. So that's just something to check out right here. Here's another factor to look at. This is the price earnings ratios going forward through 2025 pretty much. So if the S&P is at 10 times earnings, it would trade at this price. 15 times earnings is $4,000. 20 times is about $5,500. And then 25 times it's over $6,000. So these are things that you guys need to check out. Here's another one, the S&P 500 forward revenue per share. Revenue is projected to go up. So if revenue goes up, you would expect the earnings go up, just like we see right here. This is earnings line right here, the blue line. It's projected to go up. Now, something that you need to think about is right here. This right here is the 62-year-old historical chart for the federal funds rate. This is where interest rates are. And just like the other chart, the gray is where there's recessions. So right now, we had interest rates basically from 0 and then all the way up to 5.3%. So this was a massive increase in interest rates. The whole point of this was to try to bring inflation down to 2%. So when you increase interest rates, the whole point is to try to slow down the economy. If you want to go buy a house right now, what are you going to do? Interest rates are 7% on a 30-year fixed mortgage. So you don't want to go buy that home. Guess what? If you don't want to go buy that home, KB Homes is not going to build as many more homes. There's going to be less construction workers. There's going to be less business going through Home Depot, or, it trickles through the whole economy. So what we think is the large companies are doing okay right now. So if we go back to the holdings here on Triple Q, these companies are doing decent right now because they have so much cash on their balance sheets. So what they do with that cash is, back in the day, a couple years ago, right here, they would invest their cash and they would get basically nothing, no return on their money. But right now they could take their cash, they can invest it at 5%, and they're making a killing because they have hundreds of billions of dollars in cash on their balance sheets that they just go and invest. So whether the interest rates are high or low, they're still going to do okay. But there's a big rotation that may be happening, and I just actually bought some call options on IWM. So this is the Russell. So if we pop out to a 5-year chart, the Russell is down from where it was at in 2021. And the reason why it's down is because this is pretty much the inverse of what interest rates do. So these are smaller companies that require a lot of money to function. Like, they need to take loans to borrow money to function. They're not like big like Apple, where they have a bunch of cash on their balance sheet. So when you have to go borrow money to survive, you have to borrow that money at maybe 10, 15% interest rates right now. So these smaller companies are less willing to go and expand because it's like, I got to go take a loan for 15% on this money, and I don't even know if it's going to be worth it. Like, we're leveraged, we're high risk. If the economy happens to have a downturn, like, we're screwed. So they're less likely to want to expand. But interest rates are projected to go down 2 to 3 cuts this year, which is a 0.5 point to 0.75%, or 50 to 75 basis points. And next year, it's expected to do about another whole 1%. So if we're down about a 1.5% next year, there's going to be a lot of flow that comes into the IWM. This is the Russell 2000, because these companies are no longer going to have to borrow interest rate at crazy rates. It's still going to be a little bit high, but they're going to be more competitive with the big dogs. Everything comes back to this chart. Okay, this is 1970, this is right now. Do not panic when we have these little dips, because if you believe in America, you should not worry about these dips. So this chart right here, you just need to remember, it all comes down to this. By making a decision to buy into America, which is the S&P 500 or the NASDAQ, holding it through all the dips. And remember, every time that the stocks go down, just like right here, every single person, doomsday is coming. We're all gonna die, the stocks are gonna go down, stocks are gonna crash, hide your wife, hide your mom, take your money, buy gold bars. They're all gonna freak out. You just need to remember that American capitalism works. Hold for the long haul, and you need to have conviction that you believe in America. If you believe in America, great. Buy into the S&P 500, forget about it, hold it forever. That's my pitch for today. Nothing here is financial advice. Like I said, guys, I turned $0 into $670,000 in 4 years. I do trade options to help that. I'll make another video on that. I'm kind of going all over the place right now because there's a couple things that I wanted to talk about. But if you made it this far, drop a like, subscribe. I'm going to make videos like this pretty much every day because I want to help you guys out. I'm not selling anything. I have nothing really to offer except showing you my experience and how I did it. So see you guys later.